Today, we're going to talk about something that has shocked many investors. Why are gold and silver prices crashing? And could a rebound be coming soon? Let's break it down. Before we begin, here's what we'll cover today: why gold prices are falling, why silver is falling even harder, and why I believe a rebound could happen in the near future. So, gold recently surged to around $5,300 per ounce. Over the past year, it gained more than 60%, and many people believed the rally would continue indefinitely. But suddenly, it crashed. Right now, gold is sitting at around $4,100, which is a drop of over 20%. Silver is performing even worse. Silver reached a high of about $106 per ounce, but now it has lost nearly half its value. So naturally, many investors are asking, why am I losing money so quickly? The main reason is actually tied to global events, specifically the Middle East conflict. Since the war began, oil prices have been rising, while gold and silver prices have been falling. Currently, gold is down about 22% from its all-time high, and silver is down about 45%. And if oil prices continue to rise, metals could fall even further. So why is there this negative correlation? It all comes down to inflation. When oil prices rise sharply, it creates what we call an oil shock. This isn't new, it has happened many times throughout history. When oil prices rise, inflation increases globally. And when inflation rises, central banks, like the Federal Reserve, usually respond in one way: they raise interest rates. When interest rates go up, something important happens. Investors start thinking, if I invest in gold, I don't earn any yield. But if I put my money into bonds, treasury bills, or money market funds, I can earn higher returns. So money starts moving out of gold and into interest-bearing assets. That's why gold prices tend to fall when inflation leads to higher interest rates. Now, many people say, isn't gold supposed to be a safe haven during war? Yes, that's true. But when war leads to inflation, the situation changes. At that point, inflation and interest rates become more important than the safe haven narrative. Now let's talk about silver. Why does silver fall more than gold? Because silver is a higher beta asset. It's more sensitive and more volatile. It gets hit from two directions. First, just like gold, higher interest rates push investors away from silver. Second, silver is heavily used in industrial production. So when inflation rises and economic activity slows down, demand for silver drops. That's why silver tends to fall harder than gold. Now the big question: will gold rebound? The answer depends on one key factor: oil prices. Here's the chain reaction. Oil prices rise leads to inflation rises, leads to interest rates rise, leads to gold prices fall. So if oil prices come down, the pressure on gold could ease. Right now, the oil crisis is driven by geopolitical tensions in the Middle East. Supply routes are disrupted, and a significant portion of global oil flow is affected. So the future of gold depends heavily on how this conflict develops. Looking at history, gold has fallen sharply before. For example, during the 1973 to 1974 oil crisis, gold dropped nearly 48%, and in 1980 to 1981, when Federal Reserve Chairman Paul Volcker raised interest rates aggressively to fight inflation, gold fell from $850 to $300. These examples show that gold is not as stable as many people think. It's actually a highly volatile asset. So what can we learn? Gold reacts to war in two phases. At first, war increases demand for gold due to uncertainty. But when war leads to inflation and rising interest rates, gold can fall sharply. So when will gold recover? Most likely when inflation starts to decline, interest rates stabilize or fall, and geopolitical tensions ease. The key thing to remember is this: no war lasts forever. Eventually, conflicts end. When they do, oil supply normalizes, inflation pressures ease, and gold can rebound. However, timing this is extremely difficult. Right now, the situation is still very fluid. Tensions could escalate quickly, but they could also cool down just as fast. As for me personally, I consider gold too volatile to invest in directly. I prefer a globally diversified portfolio, and I only buy assets during major market crashes. But whether you invest or not, that's your decision. For now, let's stay patient and watch how things unfold. I'll be sharing more updates in a live stream tonight, possibly around 11 p.m. So make sure you're subscribed and don't miss it. Thanks for listening, and I'll see you in the next update.